Okay, saving and investment, page 6. National saving, the first equation is simply this is definition. Okay, why this is so? Don't argue with me. This is definition. The definition is that leftover from GDP after household consumption and government expenditure. That's definition. So we bring tax into this equation. So we subtract tax, add tax here. So nothing, no effect, no net effect, right? This is first line is our definition. Don't argue why is this so. Definition, simply definition. Don't argue why this girl, this cute girl should be called Yerin. Her name is simply Yerin. Likewise, okay, this is definition. Then plus add t minus t, same thing, right? No net effect. But this is very useful. Why t? This is what we call disposable income. You see, 현정 earns $1 million a year, and then government takes a big bite of it. I say $1 million, right? $400,000 as tax. What is your disposable income? $700,000, right? Income at your disposal. You can use the total income. You can use this disposable income. Yeah, something at your disposal. Ungun, how much money is at your disposal this morning? Just count it. Open your purse and count how much money you have, right? okay, don't do that. Just give me a number. Okay, she has 300,000 won at her disposal this morning. You understand? That's disposable income. Income at your disposal, even if 현정 earns $1 million a year, the total sum of money at her disposal is only $700,000, right? Is that clear? Because, so, this is our assumption. We assume people or households are believed to save a fraction or consume a fraction of disposable income. America, this is believed to 71% according to the. Then, depending on your finding, your country C is how much disposable income. I made a mistake. Not a fraction of C, but disposable income, America, then might be much bigger than 71%. And anyway, you can calculate if we have the enough data, tax and everything. Hello, Yungyong. Why are you late this morning? Very unusual. Is that clear? So a fraction, this is general. Our way of thinking is that we assume households in a country consume a fraction of disposable income, not the total income. So this may be maybe 90% America. No, bigger than that. Very close to 100%. America, this include the tax, right? C. This is public saving. In general, we assume, right? This is investment is included here, right? This include firm saving also, not just household saving. So this is the government saving. This is household saving plus, we call name is private saving. This is public saving, 공공부문 저축, private saving, 민간부문 저축. 민간 부문 includes households and firms, both of them. So in America, this may be something like 10%. and that's your finding. You can find it out anyway. So not 90%. I'm sorry. So anyway, in general, we assume certain percentage of disposable income is consumed. Then the rest is what? Saved. So this is sometimes we call marginal propensity to consume. This is marginal propensity. This is small c. A fraction. 90% Korea maybe this may be 70%, something like that. 70% Korea. America 90%. China, this is only 35 or 40, very low. China, this is very low. So sometimes we call marginal propensity to consume. This is marginal propensity to save. Then sum them up. This is small c, small s. Sum them up is 1. Understandable, right? So if your income, disposable income is 1, then you spend 0.7. Then you save 0.3. Is it clear? You think in this way. Okay. Then, okay. Because of this, we call, remember, this is income, right? We say in this way, you save a fraction of your income. You don't say you save a fraction of a product, right? That's the natural way of thinking is that we save part of your income, right? It's very awkward word, right? If we say we save a certain percentage of product, right? So natural way is because of this we call national saving rather than domestic saving. Is it clear? It's useful to differentiate the name domestic investment and national saving. Conceptually, they are different, very different, because investment is a part of GDP, while saving is a fraction of GNI. Is it clear? So putting it differently, in general, conceptually, or in your conception, investment is defined in terms of territory. Investment made in Korea, okay? And while saving is made by Korean people. Is that clear? Because of this conceptual difference, the name is that, to be precise, the name is, you say I is called domestic investment, while S is called national saving. Is it clear? Okay. So, then let's move on here. Then from the government, you understand this, right? This is private saving. Government saving is very simple, right? If T is tax revenue, government expenditure, T is tax revenue, total sum of tax revenues is for a government. This is, okay. So T is tax from government perspective, government income from government perspective. They are spending, right? If T is bigger than G, what do we call that? T is bigger than, so government saving is positive, right? And what do we call that in ordinary language? Government tax is bigger than, in the Korean language, tax is 세입. Okay, from government perspective, 세입. Then expenditure is 세출. So if the tax is bigger than G, what do you call that? Budget, fiscal, or budget or fiscal surplus. 재정 흑자. Okay. Then if T is smaller than G, we call fiscal or budget deficit. 재정 적자, we say in that way. So this is, in general, this is negative, especially in America. This is big negative. Latvia, I'm not sure. Maybe sometimes negative, other times positive. Netherlands, I don't know. But Korea, in general, it's balanced. T is so balanced budget in general. Korea is, in terms of fiscal budget, Korea is said to be healthy. Korean budget situation is, fiscal situation is relatively healthy. In general, in balance, T minus G is 0. That's balanced budget. Okay, so let's keep going. The middle of page 6, domestic investment. One more time. Saving is usually called, S is national saving, while domestic investment, because when it comes to investment is part of spending, right? Spending. Then this is, territory is important. So same Samsung Electronics make an investment in Korea, that's I. But if it makes somewhere else, it's a totally different story, FDI, something like that. But it's not counted as I here. Okay, domestic investment. Then here, our first interest is in production capacity, right? The other day, to Monday, we discussed production capacity of Korea is defined by many things, right? Y long term, Y equal alpha, and then there's L, K, H, N. L is how many people we have right now. K, how many machines we have right now. Yes. But H, what is the average level of education right now? Okay. Total number of people, total population right now, what we call stock variable. How many? How many machines we have right now? That's capital, right? That's a stock. As of now, okay. I think I explained this before. In economics, it's critical to differentiate flow and stock. Okay, stock. So today, let's talk about in terms of the beginning of a year. January 1st, 2013. Okay, at the beginning of this year, Korea had 100 machines right now. Okay, that's stock, right? Stock, 100 machines. Then over the year of time, okay, so in Korea, in a year, all through the year of 2013, Korea added 10 machines. Then itself, how many stocks machines would we have at the end of the year? 110 machines, right? So far so good. That's good news. But bad news is that as you produce things, the machine wears and tears out, right? That's what I call depreciation. Yes. Simply put, maybe the oldest 10 machines will get out of service. It's useless. It's broken. The 10 machines, that's what I call depreciation. We call 감가상각 in the Korean language. Here, depreciation has many meanings, right? In this case, depreciation is the value decreases. Sometimes we call depreciation, right? Appreciation, depreciation, right? In this case, depreciation is 감가상각 in the Korean language. Wearing and tearing of a machine we call 감가상각. So now, in a year, depreciation, 10 machines depreciates out. Then at year end, how many machines do we have? Just 100, right? Then what if increase we call investment, right? Investment. Increase in capital stock in a year we call investment. Okay, so we add addition to capital stock equal investment. Okay, decrease in for various number one, wearing and tearing is one of the reasons why capital may decrease, right? And then sometimes obsolescence. Do you use my style? My style is my phone is not my cell phone is not very old fashioned. All that I can take is take calls and it's my phone. But your phone is very different, right? When you buy very new iPhone, smartphone, you normally throw away the old phone, right? Likewise, old machines sometimes are thrown away. That's we call obsolescence, including everything. So, in a year, we add, once again, at the beginning of this year, we started with 100 machines. Over the year of time, we added 10 machines, and then while 8 machines wears and tears and become obsolescent. Then how many machines do we have at the end of this year? 102. Okay. There you go. You understood the whole picture. So, in a year, investment is a flow variable. Okay. Activity taken over a certain period of time, that's a flow variable. Okay. Depreciation is a flow variable as well, because over a year of time, 8 machines and wears and tears away. Is it clear? So, equal, now getting back to the diagram right here, capital stock normally is measured a particular point of time, normally year end or year beginning, January 1st or December 31st. Pretty much the same story, right? December 31st, 2012 is pretty much the same as January 1st of 2013. So that's actually how your practice. So benchmark point of time is normally year end or year beginning, January 1st or December 31st. So you can easily understand that. Investment in a year, depreciation in a year, these two are flow variables, while capital stock is a stock variable. Okay. One more time, flow variable is activity or performance over a period of time. That's what we call flow variable. Right? Stock variable is accumulation at particular point of time. So over a period of time, point of time. So income, I explained the income, right, the situation. Yerin earns $1 million a month. Then she spends, earning is $1 million in a month, right? That's a flow variable. And then her spending is, she's very thrifty, I know that. She's very thrifty, okay, thrifty, and then she spends only fraction, $200,000. Then that's spending is in a month, right? Earning in a month, flow. So spending in a month, flow. So at the end of first month, what is accumulation of wealth? $800,000, right? Okay, understandable. This performance. So wealth and asset is a stock variable. Okay, so KH is the other way around. She is very spendthrift. Okay, she earns okay $1 million, and she spends. So that's revenge, right, from your perspective. Okay, she spends 170. $1 million. She earns $1 million a month, and she spends $1 million and $300,000 a month. Then what would be her liability at the end of first month? $300,000 liability, right? Yeah, asset is stock variable, liability is a stock variable as well. Is that clear? Understandable. That's our accumulation. Okay, in a closed economy, S should be equal to I. because this is market clearance principle. We'll come back to this, why this is so. Okay, now we are jumping into the market for loanable funds. 대부자금 시장, Korean language. Market for loanable funds. Here, why are we concerned about interest in loanable funds? Is that funds is money, right? Yes, money or funds, 자금, money. Fund in Korean language, 자금. Money is money, 통화, or sometimes 화폐. So I suggest you use 통화 less than 화폐. 화폐 sounds a little bit too much secular or something. Okay? Not professional. So you better use 통화 rather than 화폐. So money is 통화, while fund is 자금. Pretty much same story. So why this is important? Money represents purchasing power, right? Yeah. Purchasing power means you have control over what? Resources, right? Resources. So as we all understand, economy or economics is all about resource allocation of resources, right? Who has the control over the resources? So would you bring? So you have to eat something, right? Drink something. Would you bring? That's resources, right? You have to consume resources such as every day. Resources like something to eat, something to drink, something to enjoy, things, coffee, or so. Would you bring rice and water and coffee with you, or would you simply bring money to school? Which is more convenient? Money, right? That's the same story, right? In fact, it's the same thing. 현지, right? You bring money to 200,000 won a day to buy enough food, enough everything, or would you bring the food, water, or you are something like what can I say that? 기호품. What do you call in English? 기호품. 성철, what do you call 기호품 in English? I don't know. Okay, something you snack. Okay, snack food or things. So which would you choose? Bring money or bring resources? Money, right? The same story, right? Same effect. You can buy anyway. So money means what? Control over resources, right? So if you have enough money, you can control 윤경's mind. It's my favorite saying, right? You can control everything. You have money, you can control everything, right? 이거는, right? If you have enough money, you can control 윤경's mind too. So money means what? You have control over resources. That's what I call purchasing power. So we are interested in the market for loanable funds. Understandable? Okay. So funds, money, funds represent resources actually. Okay. So now this is our assumption. So fund, the source of loanable funds is national saving. Then our assumption is the interest rate. Okay, interest rate saving, because we'll come with graph. So then that's we call endogenous variable. For many things in the real world, many things affect the quantity of saving. But here we assume our focus is only on interest rate. Okay. The same story for investment. So simply put, we take interest rate as the endogenous variable. All other influencing variables we call exogenous variables. Okay. So our interest is then prime interest is in the effect of interest rate on saving and investment. That's most typical graph you see in economic textbooks. Okay, now let's play with. Okay, today is this due, right? A summary table of your country's GDP statistics. So total GDP, consumption, investment, and net export, things like that. Please turn that in. Okay, before closing of today's class. So this is figure 7, chapter A. Okay. This is figure 1, chapter 26. Yeah. Okay. It's sometimes confusing to clarify. So we discussed, those of you who bring textbook, please open this, take a look at this graph. So we discussed previously. Previously means before the midterm exam, we discussed microeconomic theories. Now in a macroeconomic territory, that time capital, the capital demand, no supply, demand. Demand. This is demand. Let's say KD, KS. We talked about something like this. This is rental price. This price. This is in dollar terms. So as always, demand. Demand is downward sloping. Supply upward sloping. So it applies to everything, right? This is a product. The same story, basic principle with the same story because of marginal. So this is marginal from marginal cost, marginal sacrifice, or this is marginal benefit. Or to more precisely, this is MPK, marginal product of capital in this way. Okay. So this principle is exactly the same story. Product, labor, capital. Principles are all the same. Okay. Now, we do not discuss this in terms of money, in terms of rates. That's different. So this is microeconomic capital market. So not to be confused, this is about physical capital. How many machines? This is financial capital. Because as I say, finance, money is, you have control of either machine or the money. Same story, right? You have right now you have a computer which costs 1 million won. Same story, right? You have 1 million won worth computer. You have 1 million won. Same story, right? So now this is physical capital. This is financial capital. Two of them actually is substantially the same because you have money, but it's different. It's rate, not money. Okay. So sometimes it's confusing, but by now I think nobody would be confused regarding this one. This is microscopic model, the microeconomic model. This is macroeconomic model. So this is in terms of money. This is in terms of rate. That's difference. So pretty much same story. This is in terms of rate. This is, why do you, okay, this is your MPK. Okay, this is in terms of rate. Okay, MPK is declining, right? If this is declining, so funds means you not focus on investment, let's say. Okay, why do you need funds? To buy machines, right? Okay. As you buy more and more machines, MPK increases, decreases. Decreases, this is it, right? This is in terms of rate, return. Rate is return, rate or return. Return means, you don't understand what return means, right? Return means your investment, you buy 1 million one computer, then it increase your productivity, let's say worth 100,000 won each year. What is the return rate? 10%, right? I say the investment for a computer is 1 million won. By equipping yourself with a computer, your productivity will be enhanced by 100,000 words, much more. Then what is the return of the computer? 10%, things like that. So you keep adding more computers, MPK decreases, right? So this is downward sloping. Okay. Then saving is from it's you, right? Who save? So Jungwan earns $1 million a month. Okay. How much painful is it to save the first $100,000? Is it painful? Not painful, right? This is a peanut, right? 100,000 won out of $1 million. It's a peanut, right? It's very easy to save, right? Put it that aside. How about the second 1 million? So the second $100,000, it becomes more and more painful, right? Or putting it differently, anyway, you have to buy something else. You have to do something else, right? Absurdity cost, does absurdity cost increase or decrease as you save more? Increase. Okay, is it clear? This is increases. So this is saving. Okay. Then this is what? R, okay, no, 0. Equilibrium interest rate, the equilibrium, let's say F0 equal total amount saved, total amount invested. Okay. So this is market clearance principle, right? Exactly the same logic here. Ex ante, this is your investment schedule. Okay. This is your saving schedule. They are different. Okay. Exposed. The schedules are different, but at the end of the day, by the action of R, market is cleared, right? Okay. This time again, our interest is in equilibrium. Okay. Where will be the will we be in equilibrium? This is where in equilibrium. What do we have? As always, in any market, at the end of the day, or exposed after the event, ex ante, two schedules are different, right? We discussed many times before. So in an individual product market, ex ante demand schedule is very different, right? Your buying plan is very different than her sale plan, right? We discussed it. This is Kyunghwa's buying plan as a demander. Then this is Yerin's sale plan as a supplier, right? Plans are different. What do you call this? This is demand curve, right? This is supply curve. So ex ante, before the event, schedules are totally different, right? Okay, at the end of the day, exposed quantity supplied should be identical to quantity demanded, right? Because we are focusing, as I keep saying, in equilibrium. Same story here. So, exposed, okay, saving achieved should be identical to investment achieved, investment done. Is that clear? So this is market clearance principle. Here, this is we are in a closed economy. In a closed economy, at the end of the day, two of them should be equal. Is that clear? Okay, let's keep going. So now the rest is very. If you are comfortable with this, it's exactly the same logic here. At the beginning, this is product market. Product market. This is key. Our start was our beginning of discussion. The first discussion was this, right? We played with product market. This is Q, P, and then we moved on. Okay, we advanced to this is factor market, right? Factor market, labor, product market initially, labor market, capital market. Exactly same principle, no difference at all. Same here. Okay. This is actually macro. One more time, macroeconomic version of capital market here. Byung-yun, you are shaking. Yeah. What is your question? Say that again. No 차이점. Okay. There's no 차이점. But the point is, this is money. The only difference is this is money. No 차이점이요. This is money. That's a good question. This is money. This is interest rate. You need to differentiate that money. Principle is the same thing. This is in terms of rate. This is money. This is, remember, as I say, MPK is 100,000 won on computer. This is 10%. That's already different. Okay. So, 장현, are you comfortable with this? 성철. Where's the 원정? No idea? Okay, now let's move on here from this on. This is starting point. So I said in this model, only endogenous, there are two, not only, two endogenous variables is this one, R, interest rate, and the size of fund. What this one? This is I, right? This is I or S. So the effect of R on S, no, this is I or S. So two endogenous variables. Okay. So what is fund? Fund is the quantity of fund. Okay. So now we'll discuss the effect of some other variables than interest rate. Okay. So now government somehow encourages S. Which can move which direction? So tax credit for saving. What that means is that you save some money, then government is going to tax credit. Okay. Anyway, you have to know this. What the tax credit means affects you. Okay. So tax is, so you understand, right? Your tax is individually, your income. So income tax rate, okay. Yeah, I think I explained this before. Huh? Anyway, let's do it one more time. Very useful. Anyway, this knowledge is very useful to you. So practically very useful to clearly to understand. This is very useful practically. So once I said that your tax liability, or from government perspective, tax revenue, let's say, discuss this from your perspective. Your tax liability is the government tax revenue, right? You have to pay the tax. The government will take it. Is that clear? So, Taejun, DJ, is that clear to you? Your tax liability is to government perspective, tax revenue, tax receivables, right? Tax payable is tax liability. From government perspective, tax receivable, tax revenue, right? Okay, so to make this more practical, let's see this from your own perspective, tax liability. Okay, tax liability is defined by your tax base. Tax base. Okay. So this is in the Korean language 세금. Okay. This is 세원. 권세원? Yes, 권세원. Okay. Okay. 권세원, 세원. Okay. Multiplied by tax rate. What do you call this? 세율. It's clear? Okay. Of course, government defines tax rate. That's very easy to understand. More than that, government defines tax base too. Okay. For example, okay, how do you calculate a tax base? Your tax base or government tax base, the amount on which you have to pay tax, that's tax base. Okay, it's not so clear because there are lots of deductibles or allowances. Tax base is that gross tax. No, gross income. Oh, I'm sorry. By all different types of all allowances, let's say. This is Korean language 공제액, 세액 공제액. Allowances. What type of allowances? So you see, so now let's 상현 earns $1 million. This is $1 million. 상현's gross income is $1 million. Okay, K is 1,000. K is this $1 million. Okay, but it's simply assume this is 20%. So 상현's income is $1 million, and the income tax rate is 20%. The first moment you will think he is liable to the government for $200,000. No, you are wrong. Okay, so you have the right to subtract many things, what I call basic deduction. Living cost, the government, let's say, okay, something like government, okay, acknowledge 20%, $200,000 as a minimum living cost for him. Okay, just subtract. Then you can subtract if you have other families to support. That's family allowances. Okay, 가족 공제, something like that. Then sometimes you see, okay, hospital charges. You were sick over the year. It's deductible. We say deductible or allowable. We say normally deductible from you. Okay, is everyone with me? It's very makes sense, right? So maybe at the end of all the deductions, your tax base may be something like $700K only. Then his tax liability to the government is only $140,000, right? Not anything like $200,000, right? Is that clear? This deductible is allowances. This is total is this is what we call allowances or deductibles. Okay, deductibles, tax deductibles. Okay. Is that clear? Understandable? So this is the nature of your tax liability. Then these items, allowable items, basic allowance, family allowance, hospital cost, and then insurance cost. Sometimes when you can mortgage, you see, mortgage means you buy a house for long-term installment payment. That's what you call mortgage payment. Sometimes in America, mortgage payment is deductible too. Okay? Many things. That's up to the government, at the disposal of the government. Is that clear? From time to time, government, so now, so you can deduct your savings from here. What effect do you have? You saved difference. Previously, this was in his 상현자 case. Now let's assume he saves $200,000. Then case number one, the government doesn't acknowledge it as deductible. Case number two, government changes its policy. The government now acknowledges you are saving as deductible. Which case is more beneficial to you? Okay, so simply put, this is income tax rate. Okay, case number one, you are saving 200K is acknowledged as a tax deduction, tax allowances. Case number two, this is O, this is X. Government changes its tax policy from this to that. Are you getting me? In the past year, last year, the government didn't allow. Okay? You are saving for $200,000 as deductible from your income. Now, government allows it to be. Then, what happens to you? Your tax liability, does it increase, decrease? Decreases, right? How much? Your tax liability decreases by how much? 정아, 병현. Okay. That's very your income. This is your tax liability. Okay. Your tax liability is this one. This is tax rate minus tax base, right? That's what I explained. So how you calculate tax rate is here. Is that your gross income subtracted by all allowances, age, all allowances, right? Okay. This is how much? 20%, right? This tax liability. You have to pay this much tax to the government. Now allowance, this increases by how much? $200,000, right? This increases, additionally increases, right? So your tax liability increases, decreases? Decreases by how much? 현지. This is only for 현지. $40,000. Right? Now 현지, you understand it, right? Is that clear? Remember, your tax liability, this is include your allowance, your allowances, okay, increased by $200,000, right? But you are putting it differently. Your tax base increases or decreases? Decreases, right? By how much? $200,000, right? Then your tax liability decreases by 20% of that, $40,000. Is that clear? Yunna, do you understand what I'm saying? Are you sure? You just pretend to. Okay. Sangyeon, you understand what I'm saying? Okay. Is it clear to you? That's what you call tax credit. The government actually give you $40,000 back. That's tax credit. So sometimes you hear investment credit, savings credit. That's tax credit is all about. Is that clear? So then the government introduces savings, gives additional tax credit to savings. Does it encourage or discourage savings? Encourages, right? So tax, which curve moves to which direction? S will move to this direction, right? Is that clear? Okay, that's just a shift in S curve. So investment credit moves this direction, Okay, then for our economy, new technology has been introduced. What happened? New technology moves which curve to which direction? This, right? I curve this direction because you will become more productive. Same everything. Eh? Then another case is that what if oil shock, oil prices goes up? Then is it favorable to investment or unfavorable to investment? Oil shock, unfavorable to investment, right? Eh? Unfavorable to investment. This direction. Another thing is that now the government, okay, just like Obamacare, is just introduced, so put in effect. Okay, Obamacare, you know Obamacare, right? Health insurance has become available to everybody in the U.S. America. So the new policy affects which curve to which direction? Think about that. So now you can go visit your hospital at the government money or insurance. You don't need to save money for the rainy days. So you are sick. Just in case, in preparation of your sickness, you don't have to save as much money as before, right? So saving incentive increases, decreases. Decreases, save some things like that. Is that clear? So all the government policies or change in business environment, because business environment, government policies affects both I and S curve, while something happening in the business world affects I. Okay. Then there may be changing in lifestyle. Previously, Jian was very much thrifty. Then she went she took a travel to South Africa. She learned how to enjoy her own life. But she all of a sudden has become spendthrift, and then her saving goes up, goes down. Goes down, right? The change in lifestyle affects what? S. Is it clear? Right? So you understand what I'm saying, right? But don't be spendthrift. Always frugal. Okay? So to summarize our discussion about your real life tax liability to the government, this is very simple actually, very simple equation. Your liability to the government is not the gross income on the base of gross income, but your after deduction allowances, after deductions, then tax rate is, of course, at the government discretion. Okay, this is at the government discretion too. In general, basic, as I said, for your living expense, the minimum living standards is allowable, and the family in general. So married person is deductible because married person has to support his or her families. That's basic living standard, basic subsistence level. Sometimes you call it subsistence level. Then sometimes medical expenses are deductible too. Then something else at discretion of the government. For example, in Korea, 현금 영수증 sometimes is applicable, or credit card 영수증 can adaptable. And then, as we discussed, sometimes from time to encourage saving, not if not 100% of saving, but 10% of your saving may be included here, or your investment in something, or as I say, mortgage. In general, America, that's a big problem. America, some economists blame the mortgages deductible was the cause for the real estate bubble 2007 or 8 thing. So in general, mortgage payment is deductible for lawyers, business professionals. Sometimes traffic fare are deductible here. Is that clear to you? So if the government broadens the base of allowances, then your tax liability decreases. Is that clear? Because move the opposite direction. as the government becomes more lenient in terms of accepting costs as allowances, your tax liability will decrease. Is that clear? Okay. Then now let's get back to the page 7 of today's class note. Then we start with this equation, C plus I plus G. Okay. Then okay, the thing is that this is GDP, this is GDE, gross. Okay. Gross national expenditure or gross national spending, household consumption, firm investment, government expenditure. Then, what if? So, we understood this is a fraction of C y minus t, right? This is affected by y level, right? Yeah. This is 2 because this should be equal to S, right? S investment should be equal to, this is C y minus t. So what I want you to know with this is that in general, C is defined, affected by income level. I is 2, but Y, T is independent. So not totally independent, but anyway, this is not defined as a function of Y. This doesn't have anything to do with Y. So G is totally at the government discretion. Or somehow Y is smaller than we expect, we want. Okay, what policies that might the government take? Y is smaller than we want it to be. Y is smaller than what do we have? Y moves in parallel with jobs, right? What decreases, what happens? Unemployment goes up or goes down? Goes up, right? So that's what government wants to prevent all the time. So what might the government do to push this back to the normal level? Increase G, right? Very often government does that, and we'll come to that. We'll come to that next week or the week after next. There's stabilization policy. Government sometimes really does that. So now just as an example, from this one, somehow, okay, people spend more, this will increase. Okay, then at the end of the day, of course. Okay, then same story. I will increase. Now is that government doesn't have any control over C or I directly. Doesn't have. Indirectly, it has control, but direct control G government. The government total discretion of the government, right? G is government expenditure. Just simply government makes plans. Then for this year, the plan G is such and such. And somehow government wants to increase G. Then increase, from this equation, government increases its spending by delta G. What will happen to delta Y? G becomes G plus delta G. This is what I mean by increasing G by delta G. This is it, right? Then what happens here? Y increases or decreases? Increases by how much? Delta G, right? So direct effect. Delta G, how much? Delta Y equal delta G, right? Same amount. But this is not the whole story here. Some additional channel indirect effect is that so we assume same T and G are it's separated decision by the government because the government doesn't need to balance the budget. That's the key point here. So if a government, just like Korea, most of the, in the past, historically, Korea, in general, Korean government took the balanced budget policy, but not now anymore. These days, probably we will have budget fiscal deficit to a big amount we will have. But anyway, especially in America, it's a totally different story. T is one thing and G is another, totally different story. So it's up to the government as well too. What fiscal position to take is totally up to the government. T, G, some governments will move this in parallel. It goes up. But other the government, T only, G only, other times T only, depending on. America, probably over the coming several years, T should be bigger than G because American government has big debt to pay off. So that's the only way to increase. So if T is bigger than G, government has some extra money to pay the liability back with. Right? Is it clear? So probably America should bigger than, but in this case anyway, our assumption is T is the same. T is the same, but G increases. Okay, then what happens? I equal all this S, right? This I. Okay. This goes up, right? Then I should go down. I'm going to show this to you right now. Why that should be S equal what? S Y minus C minus G, right? Oh, no, I'm sorry. S equal Y minus C plus G. Right? Okay. So okay. So S is right. S is this, right? Definition and this one. This is figure 4, some page there. This is I, right? This is S curve. So everything else being equal, what's the effect of increased G here? S increases, decreases. Now G increases, right? This moves which direction? The S curve. Okay, G1, now G2, previously G1, okay, now G2 is what? G1 plus what? Delta G. Okay, so previously, now G2 is to become bigger, right? Everything else being equal, all situations the same, which curve moves to which direction? S moves this direction, right? S moves this direction, shifts this direction. So this was previously I1, S1. This is the I2, S2. Which is bigger? S2 is smaller, right? I2 is smaller. So here, this is indirect effect. So, as delta G, delta S, no, S declines, right? S decreases, right? Let's shift to that direction. So then what happens? R goes up, right? R goes up here. Right? R goes up, then what? I falls down, right? Okay. Is it clear? If a government increase its expenditure spending by delta G, initially delta Y increases by delta G, but is mitigated, the effect is mitigated by decrease in investment. So getting back to this equation, initially this goes up, this falls down. The total sum is mitigated. So here, let's come back to near the bottom of page 7. Here. So, initially direct effect, as I say, plus delta G, delta Y, we assume constant T. So saving, let's forget about that. Indirect effect is that as savings decrease, why is that? This equation, right? This goes up, this goes down, right? Then the underlined line, is very, very strange to say. So page 7, third line from the bottom. So indirect effect is delta X decreases, right? The R goes up, delta I decreases, and minus, this is wrong, delta Y, I'm sorry, correct it. Delta, not delta G, delta Y, that's simply mistyping. So, net effect, the direct effect is, direct effect increases Y, while indirect effect decreases Y. So, net effect is smaller than delta G. Is that clear? That's what we call crowding out effect. So you verbally you think in this way: as government increases its spending with taxes remaining the same. So government spending crowds out private saving. Crowds out private, because saving, resources for saving is limited, right? Because resources are taken by government spending, and the less resources will be available for investment. That's a crowding out effect. That's the meaning, crowding out. So when this room is very, very crowded, other people will hesitate to come in here, right? So you crowd them out. Is that clear? So that's the meaning of crowd out. It's too crowded. There are way too many people in this room. That's what happens, right? Because of the limitation of the size of the classroom, many students are crowded out from enrollment in a particular course, popular course. Like this. This course is not so popular, right? It's very free. Everybody is free to get in here. But in case of other popular courses by Professor Mugaya or somebody else, some professor else, it's way so popular, and while classroom is very limited, right? Many students are crowded out from the class. That's what happened, right? Is that clear? That's the meaning of crowding out. So limited resources is taken by, everybody wants to take the limited resources, right? The government takes now more resources and then crowd out investment, left over to somebody else. That's what we say crowding out effect. Is that clear? Government increase the spending by the government in general, crowd out funds for saving. So we call crowding out effect. Understandable. And that's the final page. This is good news to you today. And then there will be bad news to you too. And there will be at the last you will have a bad news too. Well, I cannot say this whether this is bad or good news. To learn something else, something new, is it good news, bad news? Good news, both. Because you have to do something, homework. Homework. Without having homework, you cannot get extra knowledge, okay? You cannot get extra knowledge, right? Always always we return to, because in economics, no pain, no gain. So externality is gain, right? Doing homework, pain. So it's clear? Okay. More pain, more gain, of course. Okay. So that's the reason why I keep pushing you, harassing you, so to speak. Okay, now finally, page 8, financial system. So institutions have two meanings, right? System and organizations. In English, right? 제도 or 기관. Say financial institutions, 금융기관, you say, banks and brokerage firms, and then the system, rules and regulations, rules of the game, we call institution too, 제도. In economics, institution is one of the key words, institution. As 제도 is more important than 기관, 제도, institutions. Rules of the game is we call institutions. Okay. So institutions, this is to match savings to investment. Okay. Smoothly flow, to have savings smoothly flow to investment. Okay. So financial system is a facilitator in the national economy. One more time. Financial institution is very, very important facilitator for the national economy. Just like the circulation system in your body, circulation will mean blood system. Blood itself is not energy, but blood what carries energy, right? We keep doing it. Blood itself is not energy, but without blood, okay, you will become powerless or even lifeless. You understand? Okay? Blood itself is not any energy, but blood is just a facilitator. Okay? So what blood is to your body, the finance is to the economy. Is it clear? Facilitator. So if blood doesn't turn around, you'll be dead. Likewise, okay? Finance, the whole finance system is in jeopardy, so will the whole economy be. Is that clear? Okay, so financial markets in general, we classify financial market in two big categories. One is 단기 금융시장, in English, money market. Okay. Capital market, 장기 금융시장 here. The benchmark is 1 year. Okay, so a financial instrument matures within a year, we call money market instrument. Okay, while capital market is longer than a year. So in economics or in management, accounting or everywhere, normally the benchmark, the divide is a year. So it lasts longer than a year, we call short, long term, or long run. Long run is slight difference, right? Long term. Okay. Then is anything matures within a year, we call short term, 장기, 단기. It's divided a year. I very strongly recommend you to take an accounting course. So this is long term liability. Current liability, say current liability, long-term liability, 장기 부채, 유동부채, 고정부채, 유동부채, say fixed liability, current liability, say in that way. It has two. Current and fixed means divided is a year. Here I explain it, right? Fixed cost, same story, right? Pretty much. So fixed or long term is mean longer than a year. Current, short run, current things is shorter than a year. The dividing line is a year. So now, so it's it's very critical to differentiate money market and capital market. That's very important. So probably you will, sometime in the future, you will take international finance course or anything, or corporate finance. In that case, this is money market and capital market is very critical. So then what different, practically, what differences do you see? First of all, commercial banking. You see, your bank is mostly commercial. When you say bank, it's more often than that, we mean commercial banks only. 상업은행, Korean language. So by nature, your deposit is less than a year. Your borrowing is, your loan is shorter than a year. So you renew your loan each year because that's the nature of commercial banking. So that's the definition of commercial banking. Okay, so saving or taking loans is a year in general, yearly basis. That commercial banking is money market. Then financial instrument. Financial instrument is the certificate of financial. You owe something to me. Okay, something like that. Okay, I lend you. That's instrument. Tool. Instrument, 수단, 금융수단, financial instrument. So there are many types of financial instruments. Typical thing is that some financial instruments are called bills. Bills is in general very short. Papers is short too. Notes is slightly longer. It's useful to remember. Bill is the shortest. Bills of exchange. Okay? And the treasury notes, you have heard of that, right? And bond, treasury bond. Well, bills or paper, sometimes it's paper. These are the shortest. This is medium term, and bond is long term. American treasury is longer than 50 years. Could be, and then American corporate bond, 회사채, could be, sometimes it's longer than 30, 50 years. Okay? So, name, bills, notes, bond. This is shortest, medium is longest. Okay? Very useful to remember. How long is it depends on the situation. Sometimes very long, other times. Okay, and the long-term fund is as of commercial banking. Sometimes you call investment banking. Probably you have heard of that. Investment banking is for the long term, right? We have heard of commercial banking versus investment banking. So commercial banking is money market, okay, while investment banking is capital market, 자본시장 in the Korean language. Then, two big categories. Simply put, think about 증권시장, 증권거래소, Korea Exchange, 한국거래소, Netherlands, we have Dutch exchange or something like that, and Latvia too, Malaysian exchange. That exchange is okay, where the long-term financial instruments are traded, they call exchange. Okay. So there are typically two types of long-term financial instrument. Is the bond market, that's debt instrument. Okay. 부채자본의 수단, okay. Korean language, 부채자본, debt instrument, 부채자본의 수단. Stock market, 주식, that's equity, 자기자본의 수단, equity instrument. So you all know that, right? This side, this is debt. This you are balance it, and then this is equity. Okay, equity. Korean language, that is 타인자본과 부채자본, 자기자본. So, okay, this one. Debt, equity. Debt takes two different forms. Short-term debt. That's from what? Where? Short-term debt. Maturing less than a year, what do you call that? Money market, right? 회사채, corporate bond is longer than, in Korea, in general, 33 years, but America could be longer than 50 years. You can understand that because American economy is much more stabilized than Korean economy. So you can count on IBM will be existing 50 years later. But in Korea, I'm not sure Hana will be here, will be around in 10 years, we don't know yet. Right? That's a symbolic. Korean corporate bond is relatively short. 3 years. America, 30 years. Well, 50, even 50 years is possible. Okay. Then this is so understandable. Okay. This is basically debt. 회사채 is debt market. Or 주식시장, stock exchange is equity market. Sometimes you say in that way. But anyway, both are capital markets. Is that clear? So capital and money. Money market, capital market is very important to differentiate one from the other. Then remember the name is very important. Very often referred to the two terms. Money market, capital market. You read newspaper articles, you will see these terms very often. Come across this very often. Okay. Remembering the name is very important. What I mean is that. Okay. So now we are almost there. Financial intermediaries. 금융중개기관, creditor, intermediary, debtor. Okay, it's understandable, right? That's intermediary. It's a broker or dealer. I don't know whether he explains broker and dealer. They are different stories. Okay, just for your practical knowledge. Intermediary, there are two types of intermediaries. One is dealer, the other is broker. It's useful to differentiate dealer, broker. For example, 복덕방, real estate broker, they are broker. Okay? Brokers don't take position of the thing traded. Okay? While development company, they take position. What they mean is that real estate developer is that they own the apartment or real estate they sell. They build themselves, they own what called position. Okay? Inventory, they have it, carry inventory, and then sell somebody else. Okay? That's dealer. While broker, okay, 복덕방 never owns a house, right? That's simply matchmaker. Is that clear? Okay. So in a sense, okay, I better not tell this story to you. Is that clear? Some intermediaries work as dealer, while others work as only brokers. So, for example, stock brokerage from 증권회사, sometimes they take positions. They buy Samsung Electronics, bunch of Samsung Electronics, and they keep it to see some appreciation in Samsung Electronics. Okay. They take it as their asset, you say in that way. That's a dealer. But in general, more often than not, brokerage is just brokerage. Brokerage is that Hyunji wants to buy something, the Samsung Electronics for somebody, then the brokerage, then the firm makes matchmaking. Matchmaker is typically broker. Okay. Then what type of financial intermediaries we have? U.S. story is told here, but U.S. practice is very different than Korea's practice or Latvian practices or Dutch practice or Malaysian practice. So here comes your part assignment for next week to find out what types of financial intermediaries you have in your country. Okay? For Korean students, I'm going to help you out. So you just push this hyperlink in this page. Anyway, this is a key source of information. So Bank of Central Bank, everywhere same story. Okay, Central Bank in any country is a rich source of information, data. So, okay, then okay. So what I mean is that Bank of Korea publishes many books, bound books, a single book. And one of which is this 한국의 금융제도. And then it's posted for free. It's total book offline. You can buy the book offline from the 정로, 교보문고, and then you can also have full access to soft files, PDF files too. So you have free access. And finally today, this one, he explains briefly because this has some relevance to you. So, did I mention that you will live 2 rounds of your lives? 2 rounds of life you will live. Okay? Because I guarantee 99% of you in this classroom will live longer than 100 years. Okay? So if you don't make, okay, terrifying. She says terrifying. Think of living longer than a year is terrifying. Yerin. I'm pleased. I would be pleased to live long. Anyway, it's up to you. Okay, you have to make a plan, right? One of which is that what would I do in the second round of my life? You have to save some money, right? The best way to do that, no, there are so many ways to save money. One way is investment in stocks. Okay? Then the thing is that it's mutual fund, especially index funds, rely on index fund. Okay, in theory, there are 2 reasons he explains in this, but that's very practical to you too. So you are very busy, you will be very busy doing your own job, right? After graduation. So you don't have enough time to analyze stocks, individual stocks. So because of this, in general, you will rely on mutual fund equal. In Korean language, the name has been changing. 자산운용사, something like that. I have stopped following the name. So America, in English, simply we call mutual fund. This is a pool of, okay, the nature, substance is mutual fund is there. Okay. I take some money of you and everybody. I make a pool of money for the investment. Then I invest the whole money and then distribute any earning to each investor in the. That's the nature of mutual fund. Then he explained 2 things in the textbook why you better rely on. I would say 3 things. Okay, 3 things. Why you better rely on mutual fund than yourself picking what stocks to invest in. Why? Number 1, you can save time. You don't need to spend time analyzing individual stocks. You don't need to do it because you are busy, actually. Your absolute of the stock analysis is very high because you have to do something else. Number 2, normally your investment is very small, 1 million won, 2 million won, 3 million, something like that. But if that small money, it's really difficult to diversify your investment. Okay, one of the number 1 tip in risk management is diversification. Diversification, you invest some part of, okay, part of money you buy Samsung, POSCO, 국민은행, or Walmart, E-Mart, everything. So if your money is small, it's very difficult to diversify, but it's pool. I make the pool. So individual $1 million, then collectively 10 of you, $10 million, right? With $10 million, that's easy to diversify. That's the only thing. The second thing is there, who do you better? I'm professional fund manager. You are just amateurs, right? Who would be better in picking stocks? Okay, so you can rely on professional knowledge, but he is doubtful about, Menkyu is doubtful about the second fact. Okay, don't count on their professional knowledge because nobody in the world except for Warren Buffett has been beating the market on a consistent basis. Sometimes they earn money more than the market average, other times lower than that. Each and every professional manager. So don't blindly count on fund managers. Don't be fooled by, especially Korean fund managers. Sometimes they are intentionally deceiving investors. Watch out. That's a matter of professional ethics. So to avoid everything, you better invest in index fund. Index fund is KOSPI, So theoretically and empirically, worldwide, okay, only one person, Warren Buffett, has been consistently beating the market. Everybody else worse than. So at the end of the day, simply put, if possible, right, put your money in index fund. Index fund is a KOSPI fund. It chases KOSPI all the time. So then that's the safest way and the best way to do that. Is that clear? I'm very serious in this regard. Don't try to analyze individually okay, individual stocks. Simply put, you have enough money. Look for, certainly I think there is Korea index funds, Korea too. So I strongly, actually almost force you, urge you to invest money in index fund only. Don't be fooled by any professional managers, because some fund managers claim that over the 10 years, my achievement is superb, but there's no guarantee. The coming, all this important is that the future, right? Future success doesn't guarantee. Past success doesn't guarantee future success at all. Okay, that's simply luck. Okay, anyone claims he has made big money over the past 10 years, that's simply luck, or he's partially telling a lie to you, because he said 50-50, right? The odds of making a success is 50. The odds of making failure is 50. He simply, most people hide failure stories, right? But success stories, they publicize it. Okay? Publicize it. So don't be fooled by the story. Okay? Especially in Korea. I'm very doubtful of Korean fund managers' professional ethic. So simply put, this one, mutual fund, especially index fund. Okay, so today I told you many practical information, much information. Okay, so any questions today? And if not, this closes today's session. Have a great weekend. Don't study too hard, 예린은 경화 and 정아.